Hello everyone! If you have just started your investment journey and you would like to play it safe by going for safe stocks, this is the video for you. For experienced investors, feel free to watch on too. So in this video, I'm going to share and review on 5 stocks that I personally find super safe to buy, stocks which you can sit back, relax and hold for 10 years or maybe even forever. But you know, forever doesn't exist. My analogy of investing in safe stocks is like banking on the big 6 clubs in English Premier League to win the title in the span of 20 years. I mean, what are the odds of other clubs winning, right?
The amazing Leicester City!
Okay, that was an exception. Alright, before I dive straight into the 5 stocks, hope you can give this video a support by tapping on the like button. Okay, stock number 1 is none other than Apple, ticker symbol AAPL. This is really a stock that you can buy and hold for the next 20 years. The company needs no further introduction as it is so established to a point almost everyone knows who and what Apple is. There are so many things to talk about, and I can even do a standalone video on this. Anyway, I'm just gonna highlight some key pointers. First up, Apple leads the US smartphone market share, though it has traditionally lagged behind on the global scale, number 2 to Samsung. That said, it is noteworthy to highlight that Samsung's lead in terms of market share has started to dwindle in recent years, meaning to say Apple and other competitors have seen a boost in the smartphone industry. To add on, other than smartphone, Apple is also leading in the tablet industry. Then, they also have subscription services like Apple Music, Apple TV+, iCloud and its popular App Store. In recent years, they have also ventured into the wearables such as AirPods and Apple Watch. More importantly, these products and services create an ecosystem that offers a compelling synergy of products and content that work together, thus locking in the consumers. In fact, some consumers are willing to be locked into their ecosystem as they love the brand so much. This means the company has very strong following and brand loyalty amongst its customers. So that's for the products and services, constantly expanding and innovating its product range. Moving on, in case you are not aware, on 2nd August 2018, Apple became the first US company to surpass a market capitalization of $1 trillion. Then, they went on to hit $2 trillion in 2020 and recently hit the $3 trillion market cap. They are the first publicly traded company ever to be worth that much. Then, you throw in the massive cash reserve and securities of nearly $200 billion, a modest dividend and a history of spending cash on share buybacks, this would appear to be a stock that gives you as much reason to believe it will be worth owning in 20 years as it is today. And oh, even the greatest of all-time investor Warren Buffett has more than $1 billion worth of Apple shares in his portfolio. So can you see how safe this stock is? Stock number 2, Nvidia, ticker symbol NVDA. Nvidia is a multinational technology company that mainly designs graphics processing units, aka GPU, for the gaming and professional markets. Check out your personal computer, you probably will see a few stickers such as Windows, Intel, and also Nvidia. The company dominates the global GPU market with about 83% of market share compared to its fiercest competitor AMD. In recent years, they have widened its focus from traditional gaming PC graphics to more complex and favorable opportunities, such as artificial intelligence and autonomous driving. Their shares went on a supersonic mode since early 2020 amid the pandemic, as it became evident that their graphic cards play an important role in powering many applications ranging from gaming consoles to personal computers to data centers and even Bitcoin mining. Personally, I feel Nvidia has an exciting future ahead. Let me summarize. Their recent monster growth has been driven by 2 key catalysts, gaming and data centers. They absolutely dominate these 2 markets. And guess what? Both of these 2 markets are expected to continue to add billions of dollars of revenue in the future. The graphics card market is expected to grow nearly tenfold by 2028, so Nvidia's biggest business seems set for healthy long-term growth. Their other key segment, which is the data center, has newfound catalysts, which is the metaverse or omniverse. So in short, their 2 biggest businesses seem set for huge future growth, it's almost like money in the bag already. To add on, the company is also starting to firing at all other cylinders. If you look at it deeper, they have a hand in almost all segments that the world is heading towards. For example, cloud computing, cybersecurity, space exploration, augmented reality, virtual reality, mixed reality, autonomous driving, electric vehicles, robotics, genomics, esports, 5G, e-commerce, cryptocurrency, artificial intelligence, metaverse, omniverse. Okay, wow, that's a very mouthful. And lastly, Nvidia currently has a market cap of $700+ billion, and I believe it is on its way to hit 1 trillion in 2022. Okay, stock number 3, Microsoft, ticker symbol MSFT. Microsoft might seem like a blast from the past to some investors, but the software company offers various products over different divisions, many of which display incredibly strong competitive advantage and have been dominating their respective markets. The company breaks its operations down into 3 segments. First, under productivity and business processes, the most iconic computer grams produced by Microsoft is none other than Office 365. Most, if not all of us, will be very familiar with this suite of products as we use them almost every day, such as Excel, PowerPoint, Word docs, and more. As most of us use them at personal and work level, this means they are in both commercial and consumer markets. This segment also includes LinkedIn. The niche and nature of this site allows it to be the default service for people to come together to connect in a virtual professional setting. The second segment is more personal computing, which is where the company built direct relationship with customers. These products include Windows operating system, Surface laptop and tablets, and gaming products such as the Xbox. For Windows OS, they are dominating the market, a fact that we all know. For Xbox, their main competitor is Sony's PlayStation, while the other products pale in comparison. The Surface device is still fairly young, so you can chuck it aside first. The Intelligent Cloud division is in the fastest growing sector. It comprises of all of Microsoft public, private, and hybrid server products as well as cloud services for business. This cloud war seems to be a 2-horse race, with Microsoft Azure fighting against the leader Amazon's AWS. If you want, you can add in Google Cloud too, hence at max a 3-horse race. It appears that by 2025 or 2026, the cloud computing market is estimated to hit 1 trillion in annual spend. Therefore, personally, I think there is never been a better time to be in the cloud business. Lastly, if you find the above too much to digest, I shall give you one reason as to why Microsoft is a safe stock to invest in.
Just give me a reason.
Microsoft is competing with Apple to be the most valuable company in the world. In fact, they overtook Apple at one point in time last year, but fell back to second soon after. I believe both will hit $3 trillion in 2022. World top 2 most valuable companies. Is this a good enough reason? Okay, stock number 4, Google, ticker symbol GOOGL or GOOG. For those who are not aware, Google is owned by Alphabet, which is their parent company. The company has a huge moat, aka ability to maintain competitive advantages over its competitors in their 2 core businesses, Google and YouTube. It's like Google this, Google that has become the natural thing that comes out of our mouth when someone wants to search for something on the internet. Interestingly, the closest competition to a Google search is YouTube search. Suffice to say, this company pretty much controls the entire search engine universe by owning the top 2 search engines on the internet today. The previous companies that we mentioned about in this video were dominating their own industry by occupying 40%, 50% or even 80% market share. But for Google, at least according to Statista, they dominated the search engine market by more than 90% market share as of June 2021. That's just pure dominance. Bank of America forecasts that YouTube's subscription business will reach $18 billion in revenue by 2025, up from $5 billion in 2020. In addition, YouTube is benefiting as most companies shift their marketing strategies from traditional TV to digital channels. Personally, I feel that when travel opens up next year, hotels and other accommodations Airlines, travel agencies will start pumping their money aggressively into online advertising such as SEO, SEM, AdSense, etc. But Google doesn't just stop at these two search engines. They have their Android mobile operating system built into devices worldwide, and the revenue growth from Play Store continues to be a bright spot. They have also expanded into cloud computing and consumer hardware, which I will not dive into the detail. Financial-wise, Alphabet has very strong balance sheet and cash position, which means the risk of running into liquidity or credit issues is negligible. Okay, the last and final stock is Facebook aka Meta Platforms, ticker symbol FB. In Q1 2022, they will be changing their ticker symbol to NVRS, so do keep a lookout. Meta Platforms is another excellent company that is dominating the digital advertising landscape. The company's business is fueled by its family of social media apps, namely Facebook, WhatsApp, and Instagram. According to Statista, Facebook was the first social network to surpass 1 billion registered accounts and currently sits at more than 2 billion monthly active users. The other two apps, WhatsApp and Instagram, also have over 1 billion monthly active users. Though some may argue that the newly registered accounts have reached a plateau or youngsters are using TikTok now, one cannot deny that it is still the biggest social media company on earth. The three apps, when combined, have more than 3.5 billion active users. Yes, there may be repetitive accounts, but hey, just to put things in perspective, the world population is 7.75 billion, so that's like reaching to almost half the people in the world. That's impressive and desirable if you are a marketer. To also share, what makes Meta's platforms even more attractive to advertisers is that people willingly provide valuable information about themselves, such as age, marital status, favorite movies, and more. These are very useful information for advertisers to do targeted marketing. With better results and ROI in the marketing campaigns, advertisers will continue to pour billions of marketing dollars into Meta's platforms. Though Meta's social media business is doing quite well, the growth rate has decelerated, which I believe the company is aware, and that could be the reason that prompted them to start investing into building its metaverse. If you are not already aware, metaverse is a place where people can interact with each other and the environment virtually. It allows for a more robust social interaction compared to how people interact online right now. This will expand its total addressable market and could keep revenue growing for more than a decade. Similar to Apple and Google, Meta has a massive war chest of cash, cash equivalents, and marketable securities. And for slightly more experienced investors, you will notice that the company's price to free cash flow and the price to earnings ratio are relatively low. The company is trading at a relatively inexpensive price right now when compared with other mega cap stocks. Okay, for those who have watched till here, I really appreciate your support. And I would like to share this rationale of buy and hold by Warren Buffett. And that is, our favorite holding period is forever. Isn't it amazing how this phrase is still relevant after so many years? By the way, this comment was made when I was still swimming. Anyway, that phrase says it all for the vast majority of investors out there. Personally, I do agree, but to a certain degree, as forever is too long and too uncertain. Things will change along the way. There are absolutely no guarantees in that regard. Look at Nokia, look at Kodak. So do remember there's no such thing as a stock that's 100% safe, but there are some stocks which are significantly safer than others. What are your thoughts on the 5 stocks? Will you be buying any of them? Let me know in the comment section below. Lastly, thanks for watching my video. Hope you can like, share and subscribe to my channel to show a little support. Thank you.